Hello and welcome to another Impact Insights. I'm delighted to have today with me Caroline Mirakian, Head of National Accounts for Pepper Money. Hello.
Hello, good morning, Dare. How are you doing?
Yeah, I'm good, thank you. Thank you for your time today. So,
No, thank you for inviting us.
Still in our lockdown period. How has it been for you? What's your biggest challenge over the last sort of 10, 11 weeks? And what are you going to come out of this having learned?
Okay, so, well, apart from adjusting to having a toddler in the background requesting endless cups of tea and have it in the right size mug, depending on the time of day it is, has proven the biggest challenge. But in all honesty, not being out and about, visiting our distribution partners, talking to our broker partners face to face, getting a sense of what the market is doing, how best we can provide the service has been the biggest one. But what lockdown has really underlined is the importance of technology, as I've now learned how to use different virtual forums. For example, this morning I've now gone on to Zoom. So it's just how to undertake the same sort of activity and being effective via these sort of forums, and it's actually proved to be a really good use of my time. So although the number of face-to-face meetings have dropped, the number of interactions haven't. So if anything, I'm now going to be probably using less of my time traveling and talking to more people via this method going forward.
Sure. I think the lockdown has certainly shown how easy this is to just log on to somebody. You haven't got to travel for an hour to go and see them. You can spend half an hour on Zoom or go to Meet or any of the other platforms that are out there, and you get the same message across. And you can do 5 or 6 of these in the morning and 3 or 4 of these in the afternoon or whatever else, and gain so many more interactions. So do you think this is where the Pepper Way will go moving forward?
I think so. I think it's going to be a combination, because there are going to be some brokers who kind of relish from the face-to-face interaction, and there are going to be some for personal reasons, or even just from the efficiency point of view, who want to probably have more virtual contact. So I think the combination will need to work to kind of accommodate everybody. But yeah, no, I definitely think that going forward, this should be some sort of medium that we'll be looking at.
Sure. And have you been doing your sales meetings on here?
Yes, yeah, and it's been really good actually, because you get to see everybody, and it's been really effective. So
sure.
Yeah, thoroughly enjoyed it. Although I can't give a hug.
Yeah, that's true.
I can't give a hug.
So, I mean, last few weeks, Pepper has sort of stepped back a little bit to where they have been for the first quarter of the year. Why was that? Why did you not sort of embrace the AVM mentality? And what about now? The leashes are off a little bit, and how's it going now?
So that's a really good question. As you know, it's been an extraordinary time for all of us, and also particularly for, I'd say, the non-bank lenders. Now, we never actually took time out. I know we did go a little bit quiet, but we were very passionate to remain open for business, and very keen to kind of keep our entire product range for as long as possible. So, and we were kind of very open at the very beginning with our communication on that. But you are absolutely right. We were restrained by physical valuations. So although we were getting inquiries, we could only take mortgage applications to a certain point, and thankfully physical valuations recommenced last week. Now, in terms of AVMs, it is absolutely something we have looked at, and it is still something we are looking at. We have carried out a lot of work on this, and I expect it will be released at some point this year, in line with the number of service enhancements that we've kind of got it on the back burner, or well, we're kind of working on, should I say. But there is a lot to take into account from a securitization perspective and selling loans later on, so hence not the commitment made just yet.
Right, okay. And talking to that, I mean, the buy-to-let side was hugely popular quarter one, sorry, in the first 3 months of the year. We're now going into quarter 3 effectively. Do you foresee lots of opportunities still for landlords, especially in the downturns and with the mortgage payment holidays that have taken effect and so on and so on?
Yeah, no, absolutely. And I think, to be honest, I think there's so much opportunity for buy-to-let landlords as well as for any borrower. Basically, there's still people who need to go and find somewhere to live. And particularly now, for those who, let's say, for example, living in London and being particularly affected by lockdown, having to stay in a room, they might be looking for opportunities elsewhere to move out, where they can kind of work from home as well as kind of live and enjoy it. So they might not be able to afford to kind of move. So I do think there'll be opportunities for them, for more tenants.
Yeah, and I think from your point of view also, we've seen a lot of the press is massive on mortgage payment holidays.
Yes, that's
How
right.
are you going to handle customers coming to you that might have taken a mortgage payment holiday previously?
Do you know what? I've actually been really impressed by the way Pepper Money have actually handled the payment holiday piece. Yes, obviously it was kind of enforced upon us, but we actually very quickly put together a team who have been focused very much on these particular customers, and we've throughout the bank holiday weekend, for example, when it first happened, literally practically everybody in the business was making phone calls to make sure those customers were
Right.
served.
Yeah.
So, I mean, there has been a number of mixed messages. I know there was an interesting debate on this only a few days ago in the BBC News around whether credit scores are going to be impacted, etc. We are very much of the forefront that, because we have been kind of keeping abreast with our customers on a monthly basis, we know their positions, and if we need to help them, we will do, absolutely. But I think now it's kind of also making them aware that, you know, the potential impact it could have later on. As I said, as I alluded to earlier, in terms of the debate that was going on, you know, yes, we've said that credit scores will not be impacted, and that's what the market is saying, but lenders will know when they have been taken out. So it's,
Sure.
you know, it's kind of making those borrowers aware, do they actually need it, as opposed to, you know, should they just take it? Because I think, interestingly, wasn't it the Joe Gardner, chief executive from Nationwide, I think a few days ago, said actually quite a lot of people have been taking them out who have actually been financially astute and got lots of money and able to pay that mortgage. So it's now kind of doing the education piece a little bit more.
Yeah, I mean, we've seen it a few times where lenders, we might have been doing a new buy-to-let for a customer or a broker's customer, but at the same time they're applying for a mortgage payment holiday through that same lender. And of course, the lender
Yeah.
said no, you can't have a payment holiday on one hand and then a new mortgage on the other hand. And you know, people are trying lots of different things, I think, at the moment. Even like you said, even if they don't need it.
No, but for me though, I think this is where the specialist market's going to really help, and the power of the manual underwriting is going to come to the fore. And this is where obviously like the services of impact are really going to come and help out, because with our processes that we've got in play and the type of questions, we're able to quickly understand the customer's ability to pay and willingness to pay. So although they might have taken out a payment holiday, if we've got an overall picture of that, the reason or the trigger of that customer as to why they've taken it out, and that actually we kind of understand their willingness to pay, then I don't see why that payment holiday should potentially impact them. So I think the specialist piece is going to really come to its own. Whereas if you think about it, with a mainstream lender, they're probably going to adjust their systems in the background a little bit more and ask the question to a borrower, have you ever taken out a payment holiday? And that's going to trigger a logic in the background to maybe either increase the rate that they're offered, or it will put a flag of potentially should we or should we not lend.
Only if they've got the technology and capabilities to be able to
Only
do
if
that,
they have the
and the
technology,
system, because we
you're
know
right.
a lot of them sit on legacy systems. So I suspect, from our point of view, being a specialist broker, distributor, etc., we're going to see a lot of clients coming to us over the sort of next 12, 24 months where their high street lender has turned them down because they've taken a payment holiday. So yeah, you're right. It doesn't affect the credit score, but it might affect their ability to get a new mortgage moving forward, I think. Which is also a good thing for us, because obviously you're very much in the adverse sector.
We are.
Do you think that's going to be, you know, we're going to see a substantial increase in that over the next 6 months?
So this one's an interesting question as well. I mean, adverse is on the rise, I think, definitely. And as you know, we've done a lot of research in autumn of last year and even March of this year via YouGov to really understand the market and to kind of raise awareness for a consumer, but also to help a broker partner identify those opportunities. And as you know, so as a result, we're very committed to the adverse market. I don't personally think we'll see a rise in CCJs and the major defaults, because at the moment, I think customers are kind of protected by that with the payment holiday piece. They've got frozen charges, you know, interest rates are now overdrafts now are interest free, for example, on accounts, etc. But what I absolutely think will happen is there'll be an increase in the little adverse. So the likely missed payments on a mobile bill, or there might be an unsecured credit card. So it'll be the smaller blips as opposed to the bigger defaults. And I think these are the ones where they are very good customer profiles, but have just fallen outside of the mainstream. So our job, I think, in the specialist piece is to kind of educate those customers right now. And it kind of goes back to the research that the latest YouGov research found, out of like the 4,000 customers that were surveyed, there was, I think it was reported that 1.34 million customers were looking to purchase a property in the last 12 months who have got adverse, but 70% actually thought that their mortgage application would be declined. But in reality, when they got help from specialists, actually it was at 13% only got declined. So I think it's going to be growing, but this is down now more than ever for us as an intermediary sector to really pull together and kind of educate those customers out there, rather than defaulting to family members who may not be as experienced.
Sure, and I think, you know, clients do tend to bury their head in the sand sometimes, and they'd rather leave it until tomorrow rather than deal with it today. Which brings me on to the next question for you. What's the 3 things would be your top tips to a broker right now, and as it stands in the current climate?
Okay, so number 1 is certainly reach out to your customers and make sure you keep in contact. There's going to be a lot of them who are taking payment holidays, and that may not be the best solution for them. So really, you know, find out what their circumstances are. But even if they're not being impacted from a negative perspective, I'm sure most customers are impacted by the pandemic, even from working from home. They might be looking to renovate their home, or just because to make it a better working environment for them. Secondly, stay in touch with yourselves. So with Impact, you are leading specialist providers. We've worked with you for a number of years, and you really, I mean, not only do you really understand this market and all the complex income, adverse credit, unusual properties and whatever, but you deal with lenders day in, day out, and you know the changing criteria. It's going on endlessly. So if someone can pick up the phone to you, then you'll be able to kind of provide that seamless service. So as I said to you, I mean, we've had outstanding feedback working with you. So on the cases. So yeah, no, and then I think the third one is embrace the specialist sector. Don't shy away from it. Don't be afraid, and ask those questions to your customers, those awkward ones, because they're probably afraid. And actually, if you embrace the specialist sector, you'll probably be able to find that you're able to help those customers. And if a BDM phoned you as well, sorry, 4th point, if a BDM phones you, make sure, you know, listen to them, see what they've got to offer, because actually, you know, they might be giving you an additional tool, which may obviously be another opportunity to help your customer.
Yeah, absolutely. I think the really good BDMs are really shining in the current climates. So what do you think about the next sort of 6 months then? What's going to be, how's it going to pan out?
So I think it's been really pleasing to see that we've started to see there's a light end of the tunnel, and dare I say, I'm going to say it like everyone, we're starting to see green shoots of recovery. We've got products returning back every single day. Physical valuations have recommenced. I think for the specialist sector, we are going to it will start to shine. It's going to be a slower build, I'd say, whilst we balance our risk. But I think as confidence starts to build over the next couple of months, I'd say the second half is going to be really positive. I think we'll be back to pretty much BAU. Albeit obviously it depends on what happens with property price discussions, but I think more or less it's going to be very a good one. And also I think as an overall market, we'll just need to adapt to the way we assist the new evolving customer, because I think there'll be so many different customer needs that come out of this pandemic.
Yeah, absolutely.
But yeah, generally a positive.
I think we'll be in huge demand over the next 6 months personally. So over the last few weeks, what's been your box set of TV choice?
Oh my goodness, dare you ask? Homeland, actually, I've been watching. That's been quite, that's been really good. What else I've been watching? Oh no, you don't want to know. So I've been watching The Bachelorette.
Oh, really? Okay.
See, I watch all sorts of trash.
Brilliant. That's really good to have an insight. And if you want to use Pepper Money, I've got my Impact Pepper Money t-shirt on today. Obviously, you can give us a call, give our guys a ring, and we can talk through inquiries. But Caroline, thank you very much for your time. So I really appreciate it.
Thanks, Del.
And we'll catch up soon. Thank you for watching. We'll do some more Impact Insights shortly. Take care and stay safe. Cheers.